Hello everybody, hope you're all doing well. It's Lane here with MetaShackle. Today I'm going to be taking a quick look at the XRP and the Bitcoin charts. We had quite an eventful night last night, as it looks like the market makers were able to bring the price down a fair amount, and the recent charts that I've made really give us a glimpse into some of the potential possibilities, and I will also talk about what I believe we're going to see, which I've been talking about in my recent videos quite a bit lately. So let's not waste any more time and let's get into the charts. For additional information and exclusive perks, do consider joining me and the rest of our community on Patreon. Now first off, I want to take a look at the Bitcoin chart just to give you a little explanation of how my charts are put together and how you read them, as I have a very unique way of charting and I use techniques that you will never see anywhere else, as I've basically created my own way of charting, which I think is far superior to the vast majority of styles that people use in charting currently. And although I use quite a few different types of charting, this is my main charting strategy, which builds the base of everything I build upon. And you can see from this chart right here, which is one of the 20 charts that I released yesterday to my Patreon members, which is a part of their monthly memberships. Right now it includes 20 charts, but it does vary depending on where we are within the cycle, because I add charts and remove charts if I think they're important at the time. But as you can see by looking at my chart here, that I do incorporate SMC or smart money concepts into my charting techniques, because I am an algorithmic trader and I'm well aware that all markets are run by an algorithm. This underlying algorithm, just like anything else in life, leaves fingerprints behind. And being able to identify those fingerprints helps us to make better decisions down the road, because we can get an idea of what price is very likely to do. So anytime you see anything like an order block or a fair value gap right here, as this is a concept that Michael Huddleston pioneered, and I'm certainly going to give him credit for his work. So I do incorporate smart money concepts which were developed by ICT or Inner Circle Trader, if you're interested in looking into them and learning more about them. Now when looking at my charts, you can see right here on this bearish order block that's marked out, I tell you what type of an order block it is. In this case, it's a bearish order block. And the D right here tells you the time frame in which it's marked. So every order block marked on my charts will always be in gray. It will determine whether or not it's bearish or bullish, and you can see what the time frame is right here. All of the fair value gaps on my charts are marked out in either green for bullish fair value gaps, or they are marked out in red for bearish fair value gaps. The same thing applies here. This fair value gap is a BISI, which is a buy-side imbalance, sell-side inefficiency, which is an area in the chart where buyers absolutely dominated sellers, causing price to gap up. So it spells out the type and the time frame. Now when you look down here at the weak dojis, which are a part of my trading strategy that I personally designed, called the Grafting trading strategy, this shows you where the weak dojis are, as marked out here according to my rule sets. Now it tells you that it's a weak doji, and it tells you which type of weak doji it is, as there are 3 different kinds of weak dojis. There are waterfalls, reverse waterfalls, and weak doji echoes. So it tells you that it's a weak doji, it tells you that it's a reverse waterfall, and the time frame is spelled out right here, meaning that this was marked on the daily chart. This area on the charts right here is the equilibrium zone. And if price is trading above it, this will be highlighted in green. If price is trading below the equilibrium zone will be highlighted in red. So each one of these levels marked out right here tells you the price at which that level is resting. So you can take a look at it and easily determine the price at which the underlying or corresponding line is currently at for each line in my Fibonacci's. And by looking down here, you can see the time frame the chart is on, whether it's the daily or the weekly or the monthly chart. And over here in the right-hand bottom corner will tell you the asset that you're looking at. Anything else, like this here, which was the all-time high that we recently set, will be marked as such as an all-time high. The level of this corresponds right here within the price range. So anytime you see something highlighted over here in the white, it corresponds with the line over here. So the all-time high as marked on this chart is sitting at this level. The same applies with the weak doji. You can see right here is it's marked out right here. So basically, it's incredibly simple to look at my charts and to understand the information that they convey. These thicker lines, like you see here, mark out the trend lines of any given pattern. If I'm marking something within the pattern, I use smaller trend lines, something that more resembles this white line here. So the thickest lines are always going to be the overall pattern, to where smaller lines, for example, I would use to mark out something like this as a trend line within that overall pattern. So it doesn't get much easier than this to be able to mark out a chart to convey the information to someone else who may not be familiar with my particular charting techniques. Now there are some very interesting things going on here. Taking a look at the Bitcoin daily chart, I have two different sets of lines marked out here. This solid white line that is marked out is based on the candles. This dotted line here that you see is actually marked out using the ordinary lines. So when we look at this, we can see that the price of Bitcoin has now fallen below and outside of the regular line chart marked here in the dots. Now if we go back to the candle chart, you can see that the price has formed a bearish order block right here on the daily, which has already rejected price right here, pushing price downward to where we're currently trading. If you take a look at where this candle bottomed out last night, you can see that it fell right into my phase 1 Fibonacci levels, coming just below the 786, almost perfectly bouncing off of this lower trend line, which is based upon the candles, not quite making it down to this bullish order block. Now it is bearish, the fact that price is broken down below the line-based trend line here, but it's a good thing that it's holding above the candle-based trend line. You can see that it punched right through this 50-day moving average, which is represented by the red line. It's already trading well below the 18-day moving average, which is represented by this yellow line. But price did get a positive reaction after hitting this area and moving back up. But it's going to be very difficult, in my opinion, for price to get through this bearish order block. Now, I do believe that we are going to be seeing much lower levels in terms of Bitcoin in the near future, but at the same time, it wouldn't surprise me one bit if we see a reversal here and price comes back up, moving up to about that 125,000, taking out this previous high right here and sweeping it before we see a move down. That very well could happen, but it's not going to be easy to get through this bearish order block. Now, when you look at the charts, there's multiple levels of support below. We have this bullish order block right here on the daily, centered at about 113,300. This is a very small order block, so it's very likely that it would not hold, especially breaking below. What we could end up seeing is something like this, where price meanders, gets rejected off of the bearish order block, comes back down, breaking below this trend line, then getting a nice bounce here, and then retesting this lower trend line before moving to the downside. We also have this bullish order block right here on the daily, centered at about 106,500. And way down here is the strongest order block of them all, which is sitting at about 78,000 on center, and is basically being crowned by the liquidity zone that I pointed out in my most recent video, which spans from about that 82,500 to 77,000 range. Now, I'm certainly not saying that if price does break down, it's going to come down here tomorrow. It's going to take quite a bit of time for price to come down to this range, but I do believe at a certain point, once price comes down and corrects, that it's very likely that it could come back down to this liquidity zone at some point. Now, whether this is 3 months, 6 months down the road, I have no idea when that's going to happen. But when we take a look at the volume profiles, you can see that the fixed volume profile is centered right here, right at the point where we saw rejection with the current candle we're seeing now. Now, if we look at the visible volume profile, which is represented over here on the right-hand side, you can see that the POC line, which is this red line right here and right here, which basically represents the point on the chart marked within it, within that particular profile, this one being fixed and only covering this particular area is focused here. This one being the visible, which encompasses everything we can see on the entire chart. The POC line is right down here, resting just above that liquidity zone. Now we do have a couple potential targets right here if price does break down. The first, in the form of a weak doji reverse waterfall on the weekly chart, which makes it much more viable than the daily, is sitting at about 105,565. The second target right here is in the form of a weak doji echo. I call them echoes because they have repeated throughout the pattern numerous times. And it's also a reverse waterfall, being much weaker because it's only on the daily. So we do have quite a few different levels that we could see here, these being in the short term, this one potentially being in the medium term, and this one down here being potentially in the longer term. And it also has this prevailing lower trend line marked out right here as well. So there's quite a few different things to look at in terms of price coming down to this particular area, between the lower pattern trend line, between the visible volume profile, between this bullish order block on the daily, between this liquidity zone right here, which is resting well below the 200-day moving average, the 50-day, as well as the 18 on the daily chart. Now that doesn't mean that price has to come down here, but you cannot rule it out. And as much as people like to believe that Bitcoin is bulletproof and we're never going to see these levels again, I can guarantee you at some point we are absolutely going to see these levels again, no matter what anybody thinks, because there's a ton of liquidity resting below current price. And with the Bitcoin supply dwindling more and more and more each day, it's going to make areas where liquidity is stacking up on the charts more and more valuable, whether it's resting below current price or whether it's resting above current price. But there is also the possibility we must consider that price could break through this bearish order block, break out of this ascending wedge pattern, retest this upper trend line, and even potentially move to higher levels, because I do think it is very possible that we could go somewhere in the range of about that 130,000 to about 135,000. It very well could come into this range, which would be represented by this box here. And another thing to keep your eyes on is the fact that Bitcoin is forming this ascending wedge pattern right here, which is most times a bearish formation. Now moving over and taking a look at the XRP chart. This is the daily chart. Now, since breaking out of this wedge pattern here after setting the initial all-time high back here on January 16th, breaking out right here on July 8th, breaking just above the upper trend line and setting this new all-time high that we just recently set right here on the 18th, price has been forming this bull flag type pattern, which is making a very nice symmetrical wedge. Now there are some things working against XRP right now, as once the price fell down here, it formed a bearish fair value gap in the form of a SIBI, which is a sell side imbalance, buy side inefficiency on the 3-day chart. Once it formed it right here, you can see that we also have the ability to put it on the daily chart, but I marked the 3-day instead because it's going to be more powerful. Price was rejected here on the 28th of July, which then dropped down here, filling this weak doji reverse waterfall on the daily. You can see that I've marked it as filled, which acted as a reversal point, with price bouncing back up, getting its second rejection off of that same SIBI. Price has now fallen down to where we're currently trading, and this candle which came down today did the same thing that we saw in the Bitcoin charts, which came down into the area between the 618 and the 702 fib levels on my chart and bounced perfectly off the 50-day moving average, and we're now trading back up into this area here, which is correlating with the fixed volume profile's POC line here in red, trading just below it. But in doing so, it also formed another bearish fair value gap right here, which could act as a breaker block, just as this one did. Meaning if price gets rejected off of this, we could come down and retest this lower trend line again. But as I've said in my previous videos, I do believe that it's most likely that we are going to see higher levels first before seeing any major declines. It doesn't necessarily have to happen that way, but I think that's what we're going to see. Even with these bearish fair value gaps here, which would be very challenging to get through, if we can break through this first one and get above this upper trend line, we could see a move up to this first level category of Fibonacci levels on my chart. Now I call them first level because they are marked, as you can see here, off of the lower part of the pattern. So this is a more immediate version using this as a low and this as a high. I consider this to be first level. Now this one up here that you see higher, this is a second level Fibonacci in my charting technique, which you can see uses this near the all-time high as the top mark and this level down here as the lower one, which gives us much higher levels ranging here into the 450 upwards of about that $4.76 range. So the first level is within the pattern, and the second level Fibonacci's are basically marking out the overall move. So they do give us different levels of information. Now both of these weak dojis here have already been filled, and we also have a potential target right here in the form of a weak doji waterfall, and which is resting at about $3.54, just below the pattern high right here, which is also the all-time high. So I will be watching these Fibonacci levels right here first and foremost, and if it does punch through this, my next target would be the second level area of Fibonacci's right up here on the charts. And if price does break down, I would be looking to this weak doji reverse waterfall to potentially become an echo, which is a repeating weak doji, and would instead be watching this lower range of Fibonacci's, which are also a first level, and which are trading in the same range as the 200-day moving average. If this doesn't hold and price can break through this bullish fair value gap at some point in the future, this weak doji reverse waterfall on the daily at $2.22 would be my target. And if the momentum to the downside really starts to gain some strength and really give a major push down, I would be looking at this bullish order block on the daily centered right here at about $1.88 as being a very likely place that we could see a worst case scenario type of support level, as we also have this dragonfly doji right here, which price already visited when going back to the reverse dragon pattern exactly as I theorized that it would, touching it nearly perfectly right here. So this would be something that I would watch as well, coming off of the very top of this dragonfly doji. But all in all, nothing at this point is set in stone, but there are a lot of possibilities on the charts, so we need to be keeping an eye on quite a few things. Watching these upper and lower trend lines on Bitcoin as well as XRP, depending on which way price breaks, keeping an eye on the Fibonacci levels as potential areas that we could see reversals. And I personally will be watching this range right here between the 23rd and between September 8th, which that line was off a little bit for some reason, which strangely enough comes right to the apex of this triangle, which if you really think about it goes in line with what I've been talking about. Now these two lines go along with my XRP moon dream. I'm not making any predictions based on time. I'm just simply marking out times where I think we could see things that could correlate with that dream. So I have them marked out here, being the 23rd, with this area in between here, which I believe could potentially be a time we could potentially see prices move to the downside. Not so much in a flash crash, but more of a gradual move down. There could be some pretty big wicked candles in there, but I think it's going to be a more gradual move. And if anything does happen, like a big major move to the downside, I think we would see that soft decline to the downside first, and then if we hit a really low level, then we could see a big wick to the downside. But I don't think it's by any means just going to be one big flash crash. I think it's going to take some time to work that out, with the area around this orange line here being when we could see the potential recovery. Now, it certainly doesn't have to happen that way because I have 2 different time frames in mind in regard to that dream, assuming that it comes to fruition, and this being the first of the 2. But I do believe that we are going to see that occur just as that dream laid out, as silly as that might sound. So thank you so much for watching. I appreciate each and every single one of you. Have a great day and good luck.